Imagine trading, except you knew exactly when to buy and sell and how the price was likely going to move all before it happened. Well, it turns out that tools like this actually do exist. At least I know one tool that does this, and I'm going to show you how you can take advantage of it.
What is StockMines and how do you use it? StockMines is a tool to make trading simple. Whether you want to make it as simple as it gets, enter a few numbers and walk away, or gain some edge and increase your returns, all the tools needed to give you high returns and not require all of the technical analysis or pattern recognition. Spend less time trading and get even better returns. How does it work? StockMines now has a lot of tools for trading Forex, crypto, options, futures, commodities, indices, but in this video, I'm going to cover the basics. What you can access with a premium membership and what you can partially access with a free account. Every trading day, StockMines AI looks for opportunities for high return trades within a relatively short time, roughly 15 to 30 minutes. It will then predict how the price is likely to move at market open and then suggest trades that you can make to capitalize on the price movement. Of course, there is volatility and price movements aren't always clean and simple, but at any given moment, a stock price will either move up or down. For each of the high probability stocks that StockMines identifies, it will then predict whether it is more likely to move up or down at market open. If the price is more likely to move up, it suggests buying right at market open with a stop loss and profit limits. If the price is more likely to move down first before continuing up, then it suggests waiting for the price to move down to within the predicted range before coming back up to the entry price, which is when you would buy, and then follow through with the trade. Free users will only get the two highest probability stocks and only the most likely movement of the two possibilities for each of those stocks. If you're a premium user, you will get all of the likely stocks and you will get both predicted movements and trades so that you can potentially profit even if StockMines AI gets the prediction wrong. Now, StockMines doesn't have a one-size-fits-all strategy like most other strategies out there. So you could have some trades that offer higher returns, or you could have some that have a larger stop loss. That's why there is a built-in calculator so that you can ensure that you have a constant dollar risk. So regardless of whether the stop loss is 3% or 7%, you can maintain a consistent risk. The list view provides all of the potential trades ranked based on the AI's rating. This considers the probability of the trade providing you with returns as well as past predictions and trades that the AI has given. So the higher the rating, the more likely it is to provide you with higher returns and follow the predictions more accurately. If you don't want to look at all the details and you want it to be plain and simple so you don't have to make a decision, you can click the simple button in the top right. It is the highest probability ticker that day, highest probability trade, with one buy and one sell point, plain and simple. And you can always look at the past StockMines predictions and trades to get an idea of the past performance. So, how do I enter the trades? StockMines gives these prices. How do you actually enter them with your broker? It can be as simple as sending your buy order, setting your stop loss, and then if the price reaches your profit sell limit, then you cancel your stop loss order and you sell for a profit. That easy. You're protected with your stop loss from losing more than you would want to lose, and you know exactly when to sell for a profit. To take advantage of larger movements, you can use multiple profit prices. StockMines provides 4 total for each trade, and each one is intended to be a quarter of your total shares. You can get great returns by just entering these orders and walking away, or you can improve your results by raising your stop loss to break even after profit 1, and then you can raise it up to the previous profit price as each next one is hit. So if profit 2 is hit, you raise your stop loss up to profit 1, and profit 3, then you raise it to profit 2, and so on. This is easy, but it does still require your attention. If you want to spend less time in front of your screen, you can use bracket orders, OTOCO orders, or profit taker stop loss attached orders to your position. Now, depending on your broker, you may not be able to enter these types of orders, or they might be called different things like the different names that I just listed, but most popular brokers will allow you to enter these kinds of orders. You can either send 4 separate bracket orders. If you're doing 100 shares, you buy 25, stop loss for 25, profit for 25, and then you do that 4 separate times for the 4 different StockMines prices that are given. Or you can do one at a time, so you have your position and you have a stop loss for all of your shares, and then you have a profit for a quarter of your shares. If that executes, then you attach another one so that you have another profit at profit 2, and then so on. You may need to look up how you do this specifically with your broker, but if your broker does not allow you to enter these kinds of orders, you can always just do it as I had mentioned first, with buying all of your shares, setting your stop loss. If the profit price is reached, you cancel your stop loss, sell for a profit. Now let's take a look at some examples. So TGL came up, and it is the highest probability ticker. It is the one that is furthest to the left. 96% chance that it will provide you with a profitable trade. You can see up here that the move down trade is more likely, or it's higher rated than the move up trade. You can also see it down here with the probabilities. So this is saying that it is more likely that it will dip down before continuing up at market open. All of these premium trades and the simple layout that I showed you are all predictions that are given before the market opens. So all of these values will, predictions and trades will update in the pre-market, but they will lock in before the market opens. So you don't need to worry about the trade or prediction changing while you're in the trade. So what you would do for TGL, seeing as it's more likely to follow this trade here and this movement here, is you would wait for it to come down to within this range, ideally close to what it is predicted to move down to, before buying on the way back up. So this is saying that you would buy it at 219, so you would wait for it to come down to roughly 209, and then if it comes back up to 219, that's when you would buy. So if we're looking at what it actually did, market open, it dipped down to exactly 209. It dipped down to 209. So then when it comes back up to 219, which is right here, that's when you would buy. You enter your buy order. If it's a bracket, then you would have your stop loss at 209 and your profit 249 if you're taking the simple trade, just profit 2, or you would have profit 1 as a quarter of your shares, profit 2 as a quarter of your shares. So you would enter that order here. It didn't come down to the stop loss. It ended up hitting 234, so it hit profit 1. That's when you would raise your stop loss up to what you bought at. So you would raise it up to 219, and then it came up to 250. So it hit 249, so it hit profit 2, and then it came back down. If you raised your stop loss again up to profit 1, you would have your stop loss at 234, and it would have stopped out here. If you didn't raise your stop loss up again, then it would have hit break even 219, what you bought at down here, giving you great returns. If you raised your stop loss up to break even, then you would have sold half of your shares at break even. You would have sold a quarter at profit 1 and a quarter at profit 2, giving you a total of a 5% return. If you raised your stop loss up to profit 1 after profit 2 was hit, then you would have had an 8.5–9% return. Now, if we're looking at AMST, it is also more likely to move down at market open. So you would wait for it to come down to at least below 354, ideally to 323, before then buying when it comes back up to 354. But for here, it came down to 354, or it came down to within the range on this candle here, and then it never ended up, if anything, it came up to the 354 here. If you entered there, then it would have stopped out at 325. Otherwise, if you waited for the next potential candle, you would not have entered because it never came back up to 354 after that point. So it would have been no trade. Now if we're looking at WBUY on May 9th, this one is more likely to move up at market open, which would mean that you would buy it at the open price as soon as the market opens. And what you can do is enter your order before the market opens for a market buy. That way you get it as soon as you possibly can. Looking at what actually happened, it ended up moving straight up at market open and did not come close to the stop loss, hit profit 1 and profit 2 on the way up. And if you raised your stop loss up to break even, you would have protected your gains there. Raise your stop loss up to 2015, and then you would have stopped out at profit 1 if you raised it up to that point. Plain and simple. The move up trades are probably the easiest ones that you could ever do. Enter your order before the market opens, and it just happens. ASST on May 7th. This one is to show you why two predictions or two trades can be beneficial. So here they're 50-50. So it's a coin toss between whether one is going to happen or the other is going to happen. In situations like this, or in every situation, you can take both trades. Because the move up trade is buying directly at market open and then following through, it would happen before the move down trade. In this case, you buy it right at market open and you have your stop loss at 164. Profit 1 is at 201. So 201 is up here, but before that it came down to 154. So it would have stopped out on the move up trade. You would have had a negative 5% return. Now, taking the move down trade, it's saying that it comes down to at least 155 and then you buy it at 164. So it came down to 154, meaning that when it comes back up to 164, that's when you would buy. So you would buy right here. And then it comes up, it hits 184. That's when you would raise your stop loss up to break even, so 164. And then it hits profit 2, 203. And then it hits 242, profit 3, and then 281. It did not end up hitting until the end of day, 321. So it hits all four profit prices, giving you a 39% return. So if you were to just take one trade, let's say it's predicted to move up, you take a loss, but then it ends up following through because if it does not follow the one movement, it is more than likely going to follow the alternative movement. Taking both trades lets you take advantage of the times when StockMine's AI is not necessarily correct. So negative 5% return plus 39% return. Your one loss is way outweighed by the gain on the profitable trade. Now, if you did raise your stop loss up to the previous profit price as they're hit, then you would have raised your stop loss up to 203 when 242 was hit. So it hit 242, you raise it up to 203, then it would have stopped out around here, in which case you would have made less returns. Still an incredible trade. So that's the basics. You have your move up trade, buy it right at open, use the stop loss price, profit prices that are suggested. Move down trades, you wait for it to move down to the specified area. If it comes back up to the entry, that's when you would buy. And then you can take both if you are a premium user. You can use all 4 profit prices if you want to maximize your returns. You can also just use one and do the simple trade and make incredible returns as well. A little bit simpler. You don't have to do as much work. You don't have to enter as many orders or raise your stop loss, etc. Hopefully that gives you an idea as to how you can use the StockMines premium trades to make incredible returns. As always, thanks for watching.